Good evening, Trade Flare family. Welcome to the Nightly Breakdown, where we do a technical analysis of the SPY and 5 stocks to give you guys a better idea of what we're looking at into tomorrow. So before we head over to our SPY, let's look at our sectors and our indices watch list, and I've added the VIX, the UVXY, and the VXX here to show us that there was volatility in the market today. So we saw some fast movements, a wider range, and we definitely want to have our stops a little bit wider when we see this starting to creep up. But we still, if we look at our VIX here, we still aren't really in the danger zone. We want to see us kind of flying above that 2250 level. If we start to break above 2250 on that VIX, start to look for more volatility in the market. But as it stands right now, nothing too crazy in the VIX. Headed over to look at our healthcare sector. Notice this one is pumping. Notice that the healthcare sector has been a leader because of the COVID concerns around the world, and the fact that we're adding that second booster. That booster is going to be given out to anybody who has gotten the shot after, I think it's 8 to 10 months after they've gotten the shot now. So the booster is going to be adding a lot of money towards those vaccine plays, and we're starting to see that bleed over into other stocks, kind of like CVS and Gilead stock. So keep that in mind. Looking at our real estate sector, this is another one that has been hot and has stayed steady. So keeping that in mind as we head into tomorrow, looking pretty decent as it stands. Utilities as well doesn't look horrible. It looks actually really good, as a lot of people are pouring into utilities as a safer bet, because people are still going to pay their gas bill, their water bill. Even during a recession, people are going to need those things. It's kind of like a mortgage. People are usually going to pay their mortgage. You don't want to not pay your mortgage. You don't want to not pay your gas bill. So keep that in mind as people move into these utilities. It's a safer bet. So look into. So yeah, something to keep in mind there with the utilities. Next, let's look at our staples. Staples look really good. Seeing a little resistance, probably could use a little pullback here. Honestly, not a bad short candidate here if you wanted to, say everything was going to take a little dip here. Maybe bet against staples, probably going to be cheaper premiums here. So that's utilities. Next, let's look at our consumer staples, and this is going to be another one where people, you're going to still go to the grocery store and buy food. You're still going to go get what you need. These are consumer staples. They're going to tend to be pretty defensive here. So look for these types of stocks like Walmart, like CVS, like stocks like where you're going to see a lot of money spent during a recession, or places where you see fear, safety. People go towards safety there. Maybe people fear a recession when they saw retail sales going down, they feared a double-dip recession, so they started to move towards safety a little bit. We saw bonds up. We saw these consumer defensive stocks start to move. So keep that in mind, especially in this XLP and this XLU starting to move like this. Keeping that in mind. Next up in the XLF, and one thing I want to point out is this particular divergence that we have been seeing for quite a while here in the XLF and TLT. So as soon as TLT goes down, we start to see XLF go up, meaning as 20-year treasury bond yields go up, then XLF, or the financial sector, goes up. So as we start to hear more talks of tapering, the banks seem to be a beneficiary of the taper talks. But as soon as we start to see more action towards COVID, or any point where we have to keep the yields the same, and we are starting to talk about more global economic slowdown because of COVID again, and COVID being a main problem, that is going to not bode well for the banks here, because they're going to do better in a higher rate environment. So keeping that in mind with the XLF, kind of an indecision day here at the top, but this could be a short candidate with more news and info after that bad retail sale. So keeping that in mind heading into tomorrow. Next, let's look at our communications, and one thing I want to point out here is this huge trend line. We've touched it 1, 2, 3, 4 times here. So we've came into this trend line 4 times, and we're about to come into it again, and I would expect to see this as a buying opportunity, or a dip buying opportunity here as we approach $82 right into the support trend line. So keep that in mind. In the communication sector, we've seen this this thing get dip bought right around that support trend line all year, so keeping that in mind as we head into tomorrow. Next up, the XLK, and I'm looking to see this rising wedge kind of break down here, because as you can see, we've creeped up a little bit higher, a little bit higher, a little bit higher, and then sellers have kind of came in today with some selling volume in the XLK, and that is something to keep in mind. Even though we do have that hammer candle, but we do have this rising wedge kind of forming here, so keep that in mind in the XLK. Next up, let's go over to the energy sector, and the energy sector has been beaten down, and a lot of this is to do with the supply chain issues, as well as more fears now in with the Afghanistan deal. So we're really looking for, looking to see what happens here. Kind of an interesting area, kind of a support level here around 46.75, where we should see support there. If we don't, this could start to get ugly in the XLE. So keep that in mind. Next up is the material sector, or the XLB here, and notice that we do have a long lower shadow today, a lot of volume, so we did have buyers towards the end of the day, and they were taking the material sector higher. So this thing has been pretty strong, and we haven't really taken out this resistance trend line, and we closed above it, but the fact that we closed above it is a good solid sign, and it could mean that we have a potential to go higher, so keep that in mind in the XLB. Next up, in the XLY, this is the one that got crushed from the retail sales data this morning, and they still had a long lower shadow, but a longer body, a longer red body. So as this thing stands, probably could go lower, probably all the way down to these lows at 173.66, and keeping this one in the watch as we see more bad news about COVID, because this one could be a really sensitive one to the COVID news. So keep this one in mind as we head into the rest of the year. So now that we have a broader idea of where we stand, let's dive into our analysis, starting off with the SPY, which tracks the S&P 500 index. So notice here, since the last time we talked, we did mention this range that we were talking about. So we've been mentioning this range a lot in the Discord, and the fact that we were going for the doubling of this range. And notice here we got the doubling of the range, and then we got, the quick back off of the doubling of the range. So the 200% mark is kind of the doubling of the range. We went right above that, came back down, saw some selling pressure back into the previous range. So right around the 100%, that's the top of the range. So we saw some selling pressure into the range, and then that's where we saw support. And that's really important, the fact that we saw support at the top of this recent range. There is going to be dip buyers there, and that could act as a potential support target in the future. So keep that in mind. As this stands, long lower wick, that is going to be a bullish sign, especially with that much volume in the morning. Zooming into the 1 hour chart here on the S&P, and I do want to point out the fact that we got a beautiful bounce off of the previous range resistance, and seeing that on the 1 hour chart with those long wicks, solid volume, tells me that we're probably going to go higher, and I wouldn't be surprised to see even all-time highs headed into tomorrow. If we do get the breakdown into the range, if we do fail to clear into this gap down that we had today, then I would expect either some range trading around 446, from around 446 to 442, and then if we do get the break out of that range, then expect some action, some volatility out of that range. So keep that in mind headed into the rest of the week. Now headed over to the watch list, and starting off with Dominion Energy, and this is a utilities company, and we covered this a few weeks back, and we covered this right on this neckline break, and we said for the probability to run up to around 78.50. We're at 78.50 right now. We traded and closed above there today for the first time, and that's that level that we wanted to close above before we started thinking about going long on this head and shoulders break, and really calling this a head and shoulders break. So looking here to head all the way up to all-time highs around $81 before we start seeing any real selling pressure. So eyes on Dominion Energy as we head into the rest of the week. This is a utilities company, and as we said, utilities have seemed like a really safe bet recently. We want to see if that's going to continue. Next up on the watch list is AbbVie, and sort of a sideways balance, diagonal balance kind of coming together here, taking out the resistance trend line today on solid volume, and I expect this to keep going higher, especially noticing the fact that we did have good earnings and that we are a healthcare company, and a strong healthcare sector right now is something that we want to keep our eye on, especially with more talks on COVID-19 and just healthcare overall. So keeping this one in mind, this one's already ran up in premium as far as the call side, as you can see here. I mean, it's pricing in a decent amount, but you can get a decent deal on the weeklies if you want to trade these. But if you want to go a little bit farther, get some time, you're going to pay a little bit extra on these. So keep that in mind when you're trading AbbVie here. We are at the top of a range breaking out here, so this one could have some built up momentum as we were in a balance. So keep this in mind, taking out the top of a resistance in AbbVie. So next up on the watch list, looking at United Health Group here, another healthcare stock, and this one is built up in a balance here, and as you can see recently we looked below, failed, and then failed back into the range. Therefore we targeted the top of the range and we made it there. Now we're at the top of the range here, and we're looking for the break of the top of this range. If we do break the top of the range, then we're looking for the doubling of this range that looks something like this, somewhere around $438 gives us a decent target. So the 440 calls don't look bad on UNH here. Maybe give it some time. September 440. Those aren't a bad deal right now. So looking at the UNH calls right now for the doubling of this range here for September. Keeping this in mind, especially with a hot healthcare sector. This one has a lot of pull on that one. So keep that in mind. Next up on the watch list is MasterCard, and this is another one that is built up in a range, but this range is honestly a lot bigger. Let's see, how long is this range? This one been in this range since all the way since February. Since the beginning of February, we've been building up in a range here on MasterCard, and right now we're towards the bottom of the range. So looking right now to see if we do get some buyers at this level. Notice that we did get some support right around that 355 level, but looking to see if we get any volume towards the end of the week to see if anybody wants to take this thing higher. Right now there seems to be some opportunity as we're trading towards the lower end of the range. So keeping MasterCard in my watch list right now, keeping this one on a close watch as we head into the rest of the week. Next up on the watch list is going to be Apple, and I really want to keep my eye on Apple. And if tech does start to run, I really want to go over to Apple and start trading this breakout here, because notice the fact that we had this huge bullish flag, or bull flag, bull pennant, whatever you want to call it. We had a bull flag, bull pennant, and we're breaking out here, and we closed above these highs, closed above all-time highs today. Even on the retracement, shows us that buyers are there. They know that this thing is ready to break out. There's going to be a new iPhone release so soon. There's a lot of hype on this one right now, so keeping Apple in mind. Actually, another thing that's important is the fact that this was the most traded option today was Apple calls, even though we had so much bearish sentiment and so much volume traded to the downside. So keep that in mind. Apple is on a lot of people's watch lists, and it's ready to break out. So keep this one on your watch list headed into the rest of the week. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, make sure you hit that like button, and don't forget to subscribe so you don't miss out on any live or educational content. If you're looking to join our premier trading community, then check out the link in the description below. Join our Discord, upgrade to TradeFlare Pro to get full access to our whole Discord. And don't be mistaken, we are not financial advisors, nor do we claim to be. The stock market is risky and you could lose money. And as always, you cannot forget that time is your most valuable asset. Quit wasting it. Get up, get out, and go get it, my friend.